In your markets news, Asia markets were mixed as the Bank of Japan also left its monetary policy unchanged after its latest meeting concluded on Friday, with some markets pairing losses earlier in the day. The central bank kept rates at 0.1%, kept the 10-year Japanese government bond yield around zero. Japan's headline inflation figures also have remained above this target since 2022 in April, with the latest reading coming in at 3.2% for August. Japan's Nikkei fell 0.52% to close at its lowest level this month at 32,442.41. Hong Kong's Hang Seng Index gained 2.12% in its final hour, reversing losses and leading gains in Asia. Over in the United States, Wall Street tumbled on Thursday, with investor risk appetite dampened by worries that the Federal Reserve's restrictive monetary policy will remain in place for longer than anticipated. The S&P 500 lost 1.64%. The Nasdaq Composite lost 1.82%. The Dow Jones Industrial Average fell 1.08%. And the JSE is trading higher today. The all-share index has added 0.4% to 73,525. The industrial 25 index is 0.6% higher. Financials have shed 0.2%, and markets in Europe are mixed at this hour. Britain's FTSE 100 has added 0.4%. The CAC 40 in France has declined by 0.5%, and Germany's DAX has shed 0.3%. A quick look at the commodities. Gold is trading at $1,924 and platinum at $931 per ounce, while the price of Brent crude oil is at $94.23 a barrel. The rand is currently trading at 18 rands 80 to the dollar, 23.01 cents to the pound, and 20 rands to the euro. Tato Mashego is a portfolio manager and certainly no stranger to the markets from Sanlam Private Wealth, joins me now. Good afternoon, Tato, and thank you so much for joining us on Point. Firstly, taking a look at some of the important data that made headlines today locally, the MPC keeping rates on hold, a welcome move. However, consumer indebtedness continues on an upward trajectory and squeezing consumers, isn't it?
Well, good afternoon, and thank you for having me. I think you're correct in saying that the market is generally concerned with the economic outlook. And we saw the decision yesterday being a split decision from the SARB, which suggests that we're certainly not at the end of this hiking cycle. I think you're correct to say that consumer indebtedness is a problem. We're seeing rising delinquencies in various aspects of the consumer lending book, whether it's from credit cards or whether it's from vehicle loans, and that obviously eventually leads into mortgage loans as well. And I think if you just consider the nature of our inflation, or the major aspects of it, certainly food aspect, certainly load shedding and administered prices, and of course fuel, which is a global phenomenon. All of that hits the lower income consumer the most. So we're seeing that low CPI at the low end of the income spectrum is running at about 9%, whereas for high income people it's only about 4%. So clearly a huge disparity there, which is a concern for the economy going forward.
Yeah, inflation also is still comfortably within the target band of the Reserve Bank at 4.8%. This week also Stats SA releasing those numbers, but food inflation still quite sticky. And I was just noting now that avian flu, where we're going to see chicken as well as eggs, which are some of the most cheaper cuts of meat and protein that people use, being in short supply. What are you anticipating for the rest of this month, and maybe for the rest of the year when it comes to food inflation?
Well, I think we saw numbers from Astral earlier in the week, and they certainly weren't good. And a significant reason for the decline in earnings to lost territory was, as you mentioned, the bird flu, which is occurring at the moment, but as well as energy prices, or rather load shedding. And so this impacts on broiler production, and then you have delays, and you have to obviously spend a lot more on raising the broilers. And so that volume delay then obviously leads to price increases, and of course poultry being one of the low end protein one of the low in proteins that people can get, it feeds into food inflation. And of course, we have the situation with grain globally, obviously the Ukraine conflict and limitations on grain there. So that means obviously other sources of grain get bid up. So in the short term, we're not going to see, I suppose, any relief from a food inflation perspective.
Yeah. Looking at the oil price, Tato, rising this morning, of course, on concerns of the Russian ban on fuel exports that they could possibly tighten supply. Do you think that we might see locally the rise of fuel prices once again? They have been on an upward trajectory and, of course, also fueling inflation as well. Maybe we might just see us going further up that inflation target band.
I definitely don't think that oil prices have peaked at this current moment. And reason being, one, you mentioned the Russian ban on exports, except for, I think, a few Central Asian countries. And of course, we know that OPEC has remained or continued its production cuts until the end of the year. So I think Q4 this year is definitely going to see a much tighter oil market. We could get closer to $100 per barrel on that side. On the positive side, some people may be of the view that with the decelerating economic momentum, the demand side for oil may come down, and that may soften prices a bit. So we may get a bit of offsetting, but certainly prices where they are at the moment are unlikely to decline significantly before the end of the year. So that could lead to additional petrol price increases locally.
Yeah. Just before I let you go, Tato, a snapshot of some of the interesting data that I picked up on for next week at the quarterly employment survey, obviously one that measures jobs in the formal sector, what your views are, and stats of liquidations given, the tightness of the economy, load shedding and all of that. Do you think that, we could see more companies taking into voluntary liquidation at this point?
I'm afraid the audio cut out on my side. I couldn't hear the question. Could you repeat it, please?
All right, Tato, I was just prompting you to next week's data. I hope you can hear me now. Next week data, the quarterly employment survey looking at jobs in the formal sector, what your thoughts are around that, and liquidations with the stronghold on the economy. Do you think that we'll see more companies opting for voluntary liquidations in the coming months?
Well, I think it's quite difficult to say whether or not we'll see an increase in liquidations from companies. Typically, that process takes place in the smaller to mid-size range as far as companies are concerned. I think definitely what we have seen, especially from banks that have reported, is that we are seeing rising, delinquencies on the corporate lending book, but it is isolated. It's not, I think, across the board. So one has to look at it from a sector by sector perspective. So it's difficult to, I think, give an overall trajectory on where we would see specifically liquidations going forward.
Yeah. Tato Mashego, thank you so much for your refreshing insights into the markets and the stories that made headlines this week. Tato Mashego is a portfolio manager at Sanlam Private Wealth, and he's been joining us for the markets. After this break, SME On Point is coming up, and we'll be taking a look at the skills that are needed to start a green business. You don't want to miss this.